Hello, hi, namaskar to all the students of CA Foundation. Now, my dear students, we have completed almost 6 problems in depreciation, right? Now, my dear student, we are learning a depreciation wherein the method of charging the depreciation changes. In certain years, the question paper setter is telling that the company follows fluctuating capital system in charging the depreciation. After few years, they are shifting from diminishing balance method to original cost method. If the rate of depreciation is given on original cost method, you can use the rate of depreciation. My dear students, if the rate of depreciation is not given under original cost method, in such case we have to follow the formula cost minus scrap divided by life. This is the formula that every student should follow under original cost method. See what happened in this particular problem number 7. This question is asked recently in September 2024 batch, my dear student. See, PQR associate bought a computer. What they bought? Computer. Computer means I use C1. When it is purchased April 2020 for rupees 2 lakh. Charged depreciation 20% per annum under diminishing balance method called DBM method. Later, they made further additions. Additions means further purchase of computer. That is, on April 21, I call it as a C2. On April 23, I call it as a C3. See what happened. On 1st April 2023, it was decided to change the method of depreciation. See, my dear student, when they are decided to change, April 23, they are deciding to change to the straight line method of basis. What method? Straight line basis. Straight line method, or we can call it as OCM method. Under charge depreciation, assuming that expected life of all the computer, what computers? All computers. All computers means C1, C2, C3. The life of all the computers is how many years? 8 years. Required. Prepare the computer's account for the year 31st March 2024 means we have to prepare the computer account for only 1 year. Shall we start? Now, fine. Let me start with the first concept. What is the depreciation? 20%. Under what method? Under diminishing balance method. So, you write depreciation 20% diminishing balance method. But it is being changed to what? It is being changed from when? From 1st April 23, it was decided to change the depreciation. From when? From 1st April 23. Depreciation is equals to OCM or straight line method. Are you given with rate of depreciation? No. Rate of depreciation is not given. Fine. Closing date. My dear children, when the accounts are closed, very easily we can identify. See, on 31st March 24, we have to prepare means accounts are closed on 31st March every year. So, we can say that accounts are closed on 31st March every year. Let us prepare a format. How many computers do we have in the problem? We have 3 computers. What they are? C1, C2 and C3. Read carefully, my dear student. What happened? See, they bought a computer on 1st April 2020 for rupees 2 lakh. When the first computer is purchased? On 1st April 2020 for an amount of rupees 2 lakh. Then the second computer is purchased on April 21 for 1.5 lakh. The third computer is purchased for 1 lakh on April 23. On April 23, the third computer is purchased 1 lakh. None of the computers are being sold. Only 3 computers we have. See, this is the date, right? I am supposed to start with the same date. 1st April 2020 cost. Accounts are closed on 31st March every year, right? When the method of depreciation is changed, April 23. Now let us write 31st March 21. Depreciation, what percent? 20% under diminishing balance method. On what computer? On first computer, that is C1. It is 2 lakh into 20% for 1 year. That comes to rupees 40,000 dash. You close it off. 1st April 22, we have a balance. Balance of 1,60,000, 1.5 lakh and 1 lakh. Fine. The next date is, what is the next date? 31st March 23. How many computers you have? Sorry, 1st April 21. This is 22. How many computers we have? We have first computer, even April 21, the C2 is also purchased. Depreciation 20% DBM. This is 22. This is 21. C1, how much? DBM, right? 1,60,000 into 20%. C2 is purchased on when? April 21, means full 1 year. That is 1,50,000 into 20%. How much we are getting? 32,000, 30,000 dash. Now the date is 1st April 22. Balance 1,28,000. This is 1,20,000. 1 lakh. Right? When the method of depreciation is changed, from April 23 it is changed. Now, 31st March 23. Still depreciation 20% DBM method. How many machines we have? April 23, right? This is purchased in April 23. We are in March 23. For C1, 1,28,000 20%, C2 1,20,000 20%. It comes how much? 25,600, 24,000 dash. Let us draw a closing line. Let me write what? See, what was the date? It is on 31st March 23. Now what I should write? 1st April 23 balance. How to work out a balance? Out of 1,28,000 subtract 25,600. We are getting 1,02,400. Here, out of 1,20,000 subtract 24,000. That comes to rupees 96,000. Fine. The last computer, as it is 1 lakh, we have to take. See, now we are in April 23. From April 23, what they did? From April 23, they changed the method of depreciation. See, on 1st April 23, the method of depreciation is changed. To what line? Straight line method. So, in bracket you write, depreciation is on SLM or OCM. Are you given with the rate of depreciation? Rate of depreciation is not given. Now what to do? We have to change the depreciation to OCM. How to work out depreciation on OCM? Under OCM, depreciation is cost minus scrap by life. Now, on what date we have to charge? We have to charge the depreciation on 31st March 24. Now, depreciation under OCM method for C1. What is a cost? Cost means it is not the original cost. It is the cost means the balance that what we have got here. Cost means the balance that what we got here. What is the balance? This is called cost, my dear students. How much it is for C1? 1,02,400. Scrap is 0. Divided by life is what? 8 years. Right? For C2. What is the cost? 96,000 minus 0 by life is 8 years. C3. 1 lakh minus 0 by 8. Use a calculation and work out answer. That answer comes to 12,800, 12,000, 12,500. Now you work out a balance. That is on 1st April 24 you are getting a balance of, that is 89,600 for the first one. Similarly 96 minus 12 is 84. 1 lakh minus 12,500, it comes to 87,500. Did you understood? Please remember, cost means it is not the original cost of the machine, because already we have calculated depreciation for so many years. We have to take the reduced value, because from here onwards the life of the asset is 8 years. Not from the beginning life is 8 years. Life is 8 years from April 23 onwards. That's why we have to take this as a cost, my dear student. For this, what we have to do? We have to prepare the computer account for only 1 year, that is 31st March 24 it should end. 31st March it should end means we have to start from April 24, we have to end on March 24. This is your opening date and that is your closing date. Shall we write? It is not machinery account, it is computer's account. For 1 year. Computer's account for 1 year. Okay. Ending on what? Ending on 31st March 24. When it is ending on 31st March 24 means what we have to write? On 1st April 23, we have to write the balance brought down. See your working sheet. On 1st April 23, when he is talking about, on April 23, he is talking about. The first machine is 1,02,400 computer, 96,000 for second computer, C1. 1,02,400, C2 is 96,000. Did you understood? These are the computers which are available with us. Add both the numbers. When you are adding, we are getting the total of 1,98,400. Later on, my dear student, the third computer is purchased on April 23. When the third computer is purchased, April 23 for an amount of rupees 1 lakh. To bank, the third computer is purchased for an amount of rupees 1 lakh. At the end of the year, no computers are sold. 31st March 24, we have to calculate just the depreciation account. What was the depreciation in March 24 for all the three computers? 12,800 plus 12,000 plus 12,500. The total comes to rupees 37,300. Use a calci and work out the total. Put a dot for the dates. By balance carry down, it comes to rupees, add the total 2,98,400 subtract 37,300, it comes to rupees 2,61,100. Total is 2,98,400. Then 1st April 24 we have to write by balance brought down 2,61,100. I hope you got it, my dear student. None of the computers are changed. Here only what happened? They changed the method of depreciation. Up to March 23, it is under diminishing balance method. But from April 23, the method of depreciation changed to OCM. Here the rate of depreciation is not given. In such case, we have to take the formula cost minus scrap by life. Cost means it is not the original cost of purchase. Cost means just a balance which is standing before starting the depreciation. Okay. Please go through this problem, my dear student, wherein the method of depreciation is changed. Like the 3 problems are there, we will solve all the 3 problems under this. Okay. Thank you. Take care. Bye-bye. Namaskar.